Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 33, which is a stock this time, Apple. If you aren't familiar with this series, don't worry, and make sure to attach the entire playlist, which includes all the videos by order, in the description below. And I also attach my Telegram channel, where I forward the analysis and videos from TradingView and YouTube, in case you want to get notified. So let's do it. I'll do it really quick because you've already got 32 previous episodes. We always start from the higher time frames, weekly and daily, which we call our rejection time frames, to know where we stand in the market. Are we overall bullish, bearish, or stuck inside a range? And of course, as price approaches the lower bound or our support area, it can be horizontal or non-horizontal. We zoom into lower time frames to look for buy setups, vice versa. As price approaches the upper bound, it can be horizontal or non-horizontal. We zoom into lower time frames to look for sell setups. We've got three types of rejections. The first one is a typical support and resistance, where we have many failed attempts to break above or below a certain level or area. Now, when it comes to crypto and stocks, I said it many times that you can't really find typical support and resistance because price has been trading in the same direction for a long period of time. That's why we go for round numbers, and we also go for market structure. Previous high, previous low, higher highs, higher lows, and so on. The second rejection is a supply and demand zone. So when we have an aggressive movement upward, that's a demand area. And as price approaches it again, we'll be looking for buy setups, and vice versa. We've got a supply zone when we have an aggressive movement downward, and as price approaches it again, we'll be looking for sell setups. The third type of rejection is a non-horizontal supply and resistance, also known as a trend line. So let's do just that on Apple. Let's start with our support and resistance. And as mentioned previously, because we don't really have typical support and resistance, let's go for round numbers. And round numbers depends on the chart. For example, if USD is trading between 1 and 2, the strongest ones are 1.1, 1.2, and so on. While Apple is trading between 0 or 30 and 200, right? So the strongest round numbers are, in this case, let's do it real quick, 50, 100, 150, and 200, right? So always go for the round numbers as according to the chart that you are trading. That's it. So now we got an idea about where are the rejection zones that might hold the price up or down in case it's a bearish trend. Okay, in this particular case, price is currently approaching the 150, which is acting as a potential support area. Next, let's go for market structure. And when price is usually trading in the same direction, we can also go for the previous highs and lows. For example, we've got a previous high here. Once broken upward, it became a support area, and a potential short-term support where we can look for buy setups, vice versa, which happened recently. We also got one here, right? And you can also go for this one. Broken upward became a support. Again, broken upward became a support, broken upward. You are following the same logic. Break, retest, look for buy, break, retest, look for buy. Now we had the break, then the retest, so we are looking for buy setups here. Okay, that's it for our supply and resistance, or in this case, market structure analysis and round numbers. The second one is a demand area, which is very clear in this particular case. We've got an aggressive movement upward from this area, right? From this entire area. We've got two supply and demand zones, which we can see better even from daily time frame. The first one is around here, which we saw from weekly time frame, and the second one is around here. So in this case, we've got a rally, base, and then rally. Anyway, don't worry about the name of it. If you want to know more about supply and demand zones, I have a full 30 minutes video about it. You can search for it on my YouTube channel, where it includes how to draw it, how to find the correct one, how to trade it, entry, and so on. Okay, so it's like a complete strategy around supply and demand zones. So we've got a demand area here as we had an aggressive movement upward from this base. Okay, but I will not draw it to keep the chart clean because we already have the 150 round number, right? So that's how you keep your chart as clean as possible. Next, which is our third rejection area, a non-horizontal support and resistance, which are trend lines. A trend line, of course, channel, wedge, rising morning wedge, and so on. Okay, so we want to find the overall move. In this case, it's clearly overall bullish. You don't need like any tool or moving average to see it, right? It's overall bullish. We want to find a channel or any pattern that engulfs the overall movement upward to find the potential like what I call the outer trend line, or the upper bound and the lower bound. In this case, of course, if you draw this one, it's very steep and not relevant to the current price action. Anyway, it's broken. So you want to follow the current price action and draw a trend line that engulfs the overall movement upward, which is clearly in this case this trend line, right? So let me make it appear on lower time frames. Fantastic. And I always try to make an offset for it. That's it. Of course, like I optimize it in a way to like follow the price action more. In this case, we've got a rising broadening wedge because the upper trend line is going like higher and higher and not parallel to this particular one. So our overall bullish trading inside these two brown trend lines. The upper trend line is acting as an overbought area, or also as a non-horizontal resistance, which also, as you can see, intersects here with around our round number 2. And the lower trend line, which is now around the current price action, is intersecting with the 150, which is also our previous high, which is also a demand area here. As we had an aggressive movement upward from it, we saw it better from daily time frame. So that's just for weekly, and look how many info we gathered by drawing simple lines and by following the overall movement and feeding the market. It's very important to start from these two time frames to know where you are in the market. Half of the work is done here. Right? The second half is very simple. You zoom into low time frames and look for potential setups. It depends on your trading plan. But no matter your trading plan, your strategy, your entry, your exit point, it's very important to start from the higher time frames to see the big picture about where you currently are. And only look for setups where you have an edge. For example, around the lower bound, we have an edge that, of course, if we look for buy setup, right? We don't want to look for a sell setup around the support area. Okay. And around the upper band, we have an edge to look for sell setups because price has more probability, or the odds are in our favor that price here might go more down than up. Okay. So that's our main job anyway, as traders, to find an edge, right? So for weekly time frame, our overall bullish, approaching the lower band around the support area, and that's like, long story short, that's why we are looking for buy setups. Now, if we zoom into H4 time frame, it depends on your trading plan on how deep you want to zoom in, right? If you zoom into H4 time frame, we saw that we were previously overall bearish here inside this correction. Price broke above the high, traded higher, then made a flat higher high. It was very strong, making higher highs and higher lows. Then here made a higher high, but it wasn't as aggressive as the previous higher highs. The higher highs previously were steep, while this one was flat. And then we've got a break below it, then break, classic retest, and we trade it lower. So we are now overall bearish from a medium-term perspective. Let me make the trend lines appear on H4. Here we go. And this one as well. Fantastic. So now the price rejected our 100. If you were trading on lower time frames, you could catch maybe this area. Depends on your trading plan. This like rise in price. But for now, let's stick to the H4 time frame, or even if you want, you can zoom into H1. But I can see it very clearly from H4. I can draw this trend line now, right? I'll make it in blue because we have a blue here. So let's go for red. So red, blue, and brown. That's how you keep it as clean as possible, right? So we've got this trend line here. And if you make an offset for it, we can see that we can't really connect many swings. So the more swings you can connect, the better the trend line would be respected. So if I make it lower like this, and I make it higher, here we go. So now I can touch 1, 2, and 3, which forms what? A wedge pattern, right? So previously I drew this channel here. Once broken downward, I can say that now the bears are taking over. The exact same scenario or logic is applied here. We are now trading lower. However, what is the wedge pattern in the first place, right? A wedge pattern means that the sellers are still in control, pushing price lower, making lower lows. However, they are not as strong as before because this lower trend line is going steeper. So a wedge pattern is stronger than a channel because the sellers aren't strong enough to make low lows. Instead, they are making low lows, but it's going flatter, just like a wedge pattern, right? So this is the logic behind a wedge pattern. So it's a bullish reversal pattern because now it's like a falling one. We're looking for a bullish reversal setup to catch the next impulse moving upward, which is impulse, correction, while waiting for this impulse. So long story short, right? I like to end it as usual by long story short. Overall bullish, approaching a support, waiting for this trend line maybe to form a new swing around it. It can be here, right? It's just a projection of what I would like to see so that the conditions would be met. Of course, price can still like invalidate it immediately and so on, or even trade lower from here, go like this and form a new swing around this area, which would be even better, providing us with a better rate, right? So like we've got two positive scenarios. Anyway, while waiting for a third swing or a new swing to form around the upper trend line, it can be here, price can go down and form one here, right? You've got the idea, right? So waiting for a new swing high to form around the upper one. Let me draw it like once and for all, for example, to make it as clean as possible. Here we go, right? But of course, price can still form one here, out form an inverse head and shoulders. We can't really know. Trading is not predictive. It's we wait for the price to make the first move, or the market to make the first move, and then we react accordingly. Don't try to predict what's going to happen. Don't try to catch the exact top and bottom, okay? So that's basically it. Let's go for gray, and let's go for trigger. For those who already know, like I know like the famous one box here trigger. And I also like to go for this area here. Here we go, support zone. That's why we are looking for buy stops in the first place, right? And of course, I can also go for overall bullish, right? So this is basically it. This is how I post my analysis. Overall bullish, approaching a support zone, waiting for the trigger to enter the buy, and when the buy is activated, it depends on your trading style. If you trade on margin or spot, the stop loss would be below the previous swing low. Depends where it is, right? It depends where it's formed, and we target at least 1 to 2 risk to reward ratio to have an edge over the market, also from a risk management perspective. Meanwhile, and until the buy is activated here, Apple can still trade lower and lower, right? Just like I showed you previously, and form swings here maybe, or even trade a little bit lower to get more liquidity to be able to push price higher. So that's why we're waiting for the buyers to take over before we enter the buy. Okay, so that's it for Apple. Best of luck, and I'll see you on the next episode.